Good afternoon, everybody. Today is Friday, the 4th of February 2010, and we're live here. So let's take a look at this market, and thank you for the retweets to the people who did that. Eric, Kevin, Greg. Great event last week for the people who are in the Charlotte area that Derek Hernquist put together. Just a real great group of professionals, and fun to be around. So let's take a look at this market, because obviously we started the week, we came in with a little bit of nervousness after the little Egyptian scare that the market had last Friday, and the market stabilized a little bit on Monday and then just rocketed higher on Tuesday. And this is what happens in bull markets. Bull markets go higher, and we continue to see a lot of bearishness in general as far as sentiment goes. And the people who are talking bearish and trying to pick the top and that sort of thing, I've been harping on it a little bit, because it's just obvious that the trend is higher, and the effectiveness of trying to pick a top is about as effective as throwing a rock at a tank if you're in Egypt. It just isn't going to work. You're fighting this power that is so much greater than what you have with your own ability and the firepower in your account and that sort of thing. But let's not throw rocks at the market, in other words, because it's just not going to be affected. Not while the market is in an uptrend. We have a legitimate long-term uptrend here intact on the weekly time frame. Trying to pick a top here is just a fool's game. Eventually the market's going to go down. Someone will claim that they picked the top, but again, it's at what cost do you try to pick the top? Because it's just no one's done it yet. We closed almost exactly on the high here today. You look at the 1 minute SPY chart. Let me change this up, because that tends to be a little bit distracting here. Get rid of that over here, and we're just looking at the SPY on a 1 minute chart. You can see we closed right near the highs here. So we've got very few. The only people this year or in the last couple of years who've sold short and are in a winning position have initiated their position basically between 349 and 351 today. Anyone else is in that familiar losing position. It was interesting. I forgot who Howard had retweeted, but somebody was saying that this market is very close to actually a double. And if you take a look at it, and I don't know what's going on with my software, but now every time I turn off my trend tool for a moment, my pointer gets stuck as a pencil. So now I can't use a regular. Anytime I try to do something, it's just going to go like this. But the low's down near 67. I got to turn the speaker off because it's annoying with this chat thing here, clicking every 10 seconds. Anyways, we're very close to doubling off the bear market lows, and if you take a look at the measured move, the measured move would suggest we continue much higher, actually. And that was something that Today Trader asked me about I think 2 weeks or so ago. And it's interesting because that's something that Ralph Acampora, the well-known technician who was did a segment at the Charlotte MTA. He was talking about the Dow Jones and how he thought that longer term that it could go to 15, 18,000, and that was based, I think, also on the measured move. Point A to B, B to C, and then C to D would get you up towards that level. And again, unfortunately, my trend tool isn't allowing me to do the things that I want to do here. But he said, a good point that was made there as well is, he said, listen, for these people who are bearish the Dow or whatever, take a look at the Dow 30. Look at each individual component of the Dow, and does that look bearish? Does GE look bearish? Does IBM look bearish? And does GE look bearish? Does IBM look bearish? these stocks just aren't in downtrends. So how can the market go down when the components are so strong, and vice versa? It just, again, we make this job so complicated, but an uptrend is innocent till proven guilty. And people say, well, couldn't this be part of the carving out a top? Sure, it could be, and we'll know that in hindsight. But until we break important levels of support, and right now the bigger important level is down near about 127, and in intermediate term, I think important level for next week will be this 129.5, and then 127 below it. But those are the important levels right now. We've got this uptrend that's just this higher highs and higher lows, and the market, corrects sideways through time a little bit and scares people and comes down to support. But what it's shown the ability to do is to pop back up each and every time. I don't know if they've been using the example of a beach ball, but I remember back in during the big bull market back in here, they called it the beach ball market, where you take a beach ball, shove it underwater, it's always going to pop back up, and that's the way this market rally seems to be as well. The intensity of this S&P 500 rally and the persistence of it is really very impressive. We take a look at where we are on this weekly time frame. Here we are just about that 131 level. So we're coming into these highs up near 132, and there's nothing that says that will be resistance once again, just because it found some resistance here. Now, it was an important level because this lower high here is where the market waterfalled from last time. So, if it's a potential level of resistance, but it's not a reason to sell short until we start to turn lower, and we're not doing that. It's a transition from a bull market. I mean, people were calling this the top before, and all it did was come down and test that 50-day moving average, trap in shorts, and then we've got this next leg higher. So, the key levels for next week, 129 and a half, and then 127. Bigger level below that would be 127. The Qs, obviously, they're up at the at the top end of this range. They closed at the high end. We've been talking about this range here, since for the last 3-4 weeks, 55.5 to 57. We came down, touched there, and now we're back up to the top end of that range, and showing that the weekly time frame, obviously we're at multiple year highs, and this is where I was saying that I think maybe it's more relevant actually for the Nasdaq's sake that we look at the composite rather than the COMPQX rather than the Nasdaq 100. The composite, the potential for resistance would be up at 2863. Here we are. That's just about 100 points away for now, and that could be an intermediate term target. But back to the Nasdaq 100, if we take a look in here, we're approaching that 58.5 area that was prior support back in 2001, late 2000, early 2001. But the market just isn't showing any signs of pulling back. The Russell, a lot of people have been bearish on the Russell, and the important thing about the Russell 2000 is it's correct. It's digesting gains. There, is this a top? We'll know if it breaks down below here, then we'll need to get a lot more defensive, and it would be looking more like a top. But while it's in this range, you give the benefit of the doubt to the primary trend, which obviously remains higher, and because we have a rising 50-day moving average as well, we want to look at the market as innocent until proven guilty also. So we're in an uptrend. This market, the Russell, is digesting gains through time, which is more bullish than price, and we remain above important levels here on the weekly time frame, and we were talking about even if that support broke, it was likely that where would we head down to? Maybe towards 75.5. That should be that's where the potential bigger support will be found if the near-term support of 77 failed to hold. Well, obviously 77 continues to hold. We're up near the top end of this range, and we would start looking at some of these levels from further back in time. So we're looking at we would be looking at, for instance, this little peak right here. That would be maybe our next level, and that was resistance a couple times, and then support in here, and then we'd be looking at these highs back from 2007. But the fact is, the market is still in an uptrend, and the semiconductors continue to be the monster uptrend in this rally, just showing no signs whatsoever of weakening. They're not even correcting through time. We had that earlier correction through time in December and early January, but from there the market refreshed and it continues to drive higher. We look at this, it closed right on highs again, so the semiconductors are just murdering shorts and continue to act bullish. Perhaps we're heading into this little level of prior support, right, or prior support from back in 2007, where we had this head and shoulders pattern. So we're back to this neckline. If we push through that, then what are we looking at? Then we're looking up at $38 a share, and to try to pick the top is just a fool's game. Our job is to look for the low risk entry points and then to manage risk. It's really that simple. So in order to do that, we can't look at the market one dimensionally and say, well, the trend is up, because obviously you have your days when the trend is lower, and to buy into this type of fear doesn't make sense. But as the market recovers and begins to move back higher again, then it makes sense to get long again. By the way, the SPY, I don't know if you guys have noticed, I talk about that 5-day moving average all the time, and yesterday it just nailed it almost perfectly. And it also came down where this market reversed was if you took the Egypt sell-off lows to the highs from Monday, it came down and retraced just about almost exact 38.2% of that. So in other words, what we're looking at from the week ago Friday lows up to the highs on Monday, we retraced, here's the 38.2% retracement, and touched intraday on that rising 5-day moving average, which was also this was only yesterday, I should remember, but I believe it was also the location of daily S2 as far as pivots go. So gold is continuing to kind of try to recover in here. On the weekly time frame, it's at this bigger level, kind of maybe had a little shakeout. Now it's trying to stabilize. Well, let's look at the weekly level if I'm going to mention weekly. We've got this longer term uptrend, which coincides with that rising 40-week moving average. It's a correction, I guess on the daily time frame within this much bigger weekly time frame. So to me, gold is trying to stabilize in here, and it looks kind of like a waste of time. We've got some bigger support that was broken near about 133. That's going to, I think, probably act as resistance. Getting back above that, though, then maybe we've built a good short position into this market, and it can continue to move higher. But when stocks are in this market, so you think of like stocks like Green Mountain Coffee Roasters, which has just been tormenting shorts, pretty much since the day they came public, but in particular since late 2006. This stock has its share of healthy corrections, and I think it builds in a bigger short position each time. Even this week, here's a stock that looked like maybe it was going to head lower. It looked like, well, maybe Green Mountain Coffee Roasters is going to break down a little bit. Then they come out with news and just continue to destroy shorts in there. And today we had follow through. Once it got back, it held a 2-day. Once it got back above that 2-day volume weighted average price here. I didn't trade that one, but you have a lot of examples of strength in this market. Lululemon obviously breaking out to all-time highs here today as well. Just a super strong stock, and it digested these gains from the earnings in a very healthy way. That is sideways through time, and then it broke out the high end of that range and continues to move higher. So very impressive. I also wanted to talk about this PWER. I mentioned earlier in the week I thought it was going to be one of the more interesting earnings reports because of the massive short position. And last time the shorts, the company reported revenues last quarter up 300% or so. Yesterday they said they were up, I think, I read the headline quick. I think they were up, the revenues were up 180% or something. Excuse me. Earnings increased dramatically, but they guided lower. Hold on. Empty cup. That's not cool. they guided lower, and the shorts, the shorts won this battle. So again, it wouldn't have been worth the risk to bet on earnings from what I could see, but impressive job of holding that one back. And the solar group in general has been, I tweeted that earlier today, that they've been trading a lot like biotechs almost. You take a look at some of these names that are actually still pretty healthy looking, like SOL and LDK. LDK's got a nice looking weekly chart, but the way they trade is just very gappy and that sort of thing. And PWER is kind of the poster child for that, I guess. An impressive one today in the solar group is this EMKR. They reported earnings, and pre-market is actually down at 130 or so, and then it reversed nicely through the recent little consolidation here, and just two real nice drives higher today. This is a good one still to keep an eye on, because this weekly chart really looks like it's got some room to run, and they absorbed their earnings today. So good looking chart there. But I also wanted to talk about last week, before I did that MTA event, I had posted some charts on Alpha Trends. Let's just take a look at that post real quick, and let me see if I can get that to expand better. Maybe not. Anyways, I was talking about some potential trades. So BLTI as a potential above this 315 area, CELL above this prior little level of resistance, RIM. So what I'll do is I'll just type these in here, and you guys can go look at that post if you like at another time. But the first one was BLTI. So I put this in there a week ago Thursday, and so that would have been what date? I don't have a calendar in front of me. I should, but that would have been, let's see, 1, 2, 3, 4, 5, 6 days ago. So on this, I think it was on this at the end of this day. I had posted it. So the end of the 26th. And I said, getting above this level, maybe it could get going. Well, then we had Friday, of course, the market sold off. And then it did get above that level here. In our chat room, we had bought it actually on Tuesday, was this Tuesday or was it Wednesday? Wednesday, right here. And had a really nice run. And this is the type of stock, you look at the weekly chart, it still has room to run up to that $4 level. The point, though, was that if you're going to get involved in these, you want to buy them on strength and then set your stop above the high or low, whatever one of those that you were most comfortable. So you wouldn't have been stopped out of this even if you had purchased the stock on this day. The other long potential trade I'd mentioned was CELL. Now, CELL had earnings, and I was telling people, this weekly chart looks fantastic. However, I don't like to bet on earnings, so what I did was on Wednesday, I went in and it had a good day Tuesday, and it got above the trigger price, which was this level right here. I wanted the exposure, but I knew they had earnings coming, so I bought the February 10 calls for 15 cents. They were worth, with the stock at 940, they were really worth nothing basically. But it was a bet on earnings, and obviously, I got lucky in there. But that was, so sometimes when you have a compelling chart set up like CELL, and you've got a bull market, and you've got this, this longer term chart that it just, the stock was building energy under here. Sometimes I take a bet, and that's all it is. I mean, at 15 cents per contract, that's $150 for 10 contracts. If that's what you're going to trade, they eventually became worth $2,500, and those are obviously the exception to the rule. But the point is, the setups were there. The setups were shown, and how you want to trade them is up to you. We also spoke about research in motion in that post, and I was talking about research in motion, saying, and that was right over in here. And research in motion, I said, so this was, it looked like it was making this inverted head and shoulders pattern. So it was right in here. And I said, listen, if we can get back above this high right here at this point, then we want to get involved. You don't want to get involved here while we're waiting for it, but we wanted to see that 5-day moving average flatten out, the stock get above, and at the time the setup was looking for some movement like this. Well, instead on Friday, the markets sold off on the Egyptian news. The stock has since recovered, and it has broken some key resistance in here. You would have had to been in it to participate, because obviously it gapped 2 days in a row, and those are tough to get involved in. But I think I didn't trade RIM, so I can't say what you should have done, because to me that's just, I don't know, there's not much value in unless you were actually in it, I think. But on that same post, I also spoke about MBT as a potential short sale candidate. The weekly chart in here still looks vulnerable to me, but you can't make your decisions on a weekly chart. The daily chart, it's in a downtrend. It's showing these little consolidations and driving lower. So this one, obviously, the day. So I mentioned it this day, saying if it didn't get below here, it looks like a good short candidate with a stop up near about this area. Well, it did break down and made a nice pattern of lower highs and lower lows. It rallied up, made another lower high, and then it made a higher low here and a higher high. So realistically, had you been involved in MBT, and I day traded this one, you would have been involved right in here about 19.5, and if you were holding it as a swing trade, I think you should have been out right here at probably about $19.30. And that's the way shorts are generally going to work in an uptrending environment, in a bull market. That is, they're not going to work very good. So you got to take some off into these spikes lower. DISCA was another one that I looked at this weekly chart, saying looks like it's potential trouble in here. And on the daily time frame, it was breaking down, and we were looking at it, same thing over in here below these lows. Well, it gave a reason to get involved on the short side, and maybe we're involved here. I didn't trade this one, but I think I would have given up on it that day and missed out on this gap lower. But what happens a lot of times in these bearish looking setups, and it's good to look back here, is that our number one job, no matter if we're trading long or short, is always risk management. Once you get involved in that short and it starts showing you some profitability, what you want to do is take a little bit off, lower your stop to break even, or maybe get stopped out for a small loss right here, and then not get emotional the next morning as it gaps lower and try to get back involved. Because from these failed moves, you get these fast moves, and here there's just been a huge reversal in DISCA. And my suspicion would be that the shorts got hurt pretty badly in there for the ones who are, at a hedge fund trading 500,000 shares and that sort of thing, and trying to break that longer term weekly chart. Last one I want to talk about here briefly is this VCI, because just to follow up on that post. VCI still looks toppy on a weekly chart, but not quite broken yet. You can see here it's undergoing this sideways consolidation, just looking like a little ledge that it's ready to get shoved off, but it hasn't been shoved off that ledge yet. So VCI, I would still say that you want to potentially look at this as a short sale candidate, and you might have even gotten involved. It was a choppy stock, but if had you gotten involved, I think it was there was no reason for anything more than probably about a 50% or a 50 cents loss in this one. But anyway, so there's just some follow up that I wanted to do. The biggest leading, I don't know if it's the biggest leader, but similar to the semiconductors is the XLE. The energy ETF has just been a monster rally here. Just a beautiful pattern of higher highs and higher lows above that rising, in particular above the rising 20-day. That's the blue 20-day moving average. And still, where does this thing have the potential to go? Maybe up towards $77 a share, 77.5, maybe up towards 80. It's in an uptrend, trying to short it. Good luck if that's your game. But when I'm long, I'm generally rooting against the shorts. Nothing personal, but I think our jobs just become a lot easier when we go along with the trend. Fighting the trend is a very difficult way to make a living in the market. So, interestingly, I don't see any requests here, so I'm going to just end this now. Thanks for tuning in, and I'll talk to you again next Wednesday.